I think we're live now. Okay, good morning and welcome to BTFD TV. I am the Trading Wife and we're going to talk about stocks and charts today. Certainly it's been a little volatile in the oil sector. It was looking really great a couple days ago, and then we've got a big pullback on possible Iran deals, and who knows what all the other reasons are that folks decide that oil should go up or go down. But it's certainly been volatile of late. And I've been in SD, which was up significantly after just a day and then just went right back down. I'm a swing trader, so I'm not accustomed to being in and out of something within a day or two. But we'll take a look at that today, as well as some other charts. It was requested that we look at some hourly charts today, because one of the things I've been mentioning is this sideways choppy market that we've been in since the beginning of the year, and even before the beginning of the year, at the end of last year, has been very difficult for swing traders like me, who stay in positions for several days, 2 weeks, to months. So it can be prudent in markets like this to start looking at other time frames, including the weekly charts. I tend to go longer rather than shorter. I prefer to go longer rather than shorter, but sometimes shorter can really be the way to go. And I think certainly in these oil stocks, that could be the key to profits in the oil stocks right now. So we're going to take a look at some hourly charts today. We'll pick at some weekly charts probably as well. I'll go ahead and go through all the charts in my portfolio, and I am taking recommendations for charts to look at. I see that we already have several in the room here, in the chat room, from folks to look at. So if you'd like to send me some other tickers to look at, I will go ahead and check my email at thetradingwife@gmail.com. That's all one word, thetradingwife@gmail.com. Or you can contact me on Twitter. I'll keep my Twitter sphere open. I think there's a chat that you can join on here as well, although at one point I had somebody joining it, but nobody's really taken advantage of that. So if you see a place to click on, I will keep an eye on the chat that's available through the BTFD broadcast here, through Google Hangouts. And if I see something there, I'm happy to check that out as well. I'm also keeping an eye on my Twitter account. So that's the Trading Wife, ampersand, the Trading Wife, all one word. And, if you want to check out my website and you haven't done that yet, you should go to www.thetradingwife.net. Now that's .net. So, and you can see some posts that I've done over the weeks and so on and so forth. So, okay, without further ado, let's move on to the charts. Right, there we go. There is the chart of the Qs. Just happened to be what I have up here first. So we'll go ahead and start with that. I heard Lance saying earlier that he thought everything had gone red. Why is there so much red? This doesn't look like a very red market to me. It looks like a consolidative market to me, not distributive. Sorry, just taking a sip of my cuppa, as it were. So thirsty this morning. This Q chart really is not bad looking at all. Let's see if I can get this. I've got this in the wrong way here. There we go. As we pull back here, you can see it's definitely still on its uptrend. This trend line doesn't seem to be make much sense at this point. I guess it was supposed to be based on this line here, but I still see a trend line in here. I think that it's just a little bit different from what it was. It still works out well with these two candles back here in October. Certainly we have this little triangle in here that's forming as these indices continue to move in a range. But one of the things I like, and I'm seeing this on a lot of these indices, is look at the way all these moving averages are bunched up. You have the 200 below and it's rising, but you have the 50, the 80 MA, the 34 MA, and the 21 day, which are all the major averages that I look at other than the 200. And they're all bunched up right there together. So that's a really nice look. And this does not look like a bearish chart, right? We have this big left-right combo here back from the beginning of this month. Looks like April, what was that? April 2nd was the doji, and then April 6th, which was the Monday, was the bullish engulfing candle. It has not lost that ground at all yet. Still in an upward trajectory from there, and it's through all those moving averages. So this is a bullish looking chart. I have no reason to think that this is a bullish looking chart. Okay. Goofy Golfa Gigi is saying I'm on the BTFD chat via Twitter. Via Twitter. No, I don't see you. Via Twitter? I'm a little bit confused about that. So I think maybe I don't know how to do that. I didn't know there was a BTFD chat via Twitter. I don't. I have a group chat in here, and Gigi, you're the one person that I saw here once before, but I'm not seeing you now. So I don't know what's up with that. But let's just continue moving right along here as we look at the charts, and maybe I'll see your chat. I don't see you on Twitter sending me anything, and I don't see you on the BTFD chat, so I might need to learn a little bit more about how that works. Okay, so let's take a look at the other indices. Here is the SPY. Doesn't look that much different from the Qs. It's a little bit more sideways action and a little less upward trajectory, but it's still an upward trajectory. You still have bullish candles in here. You still have these bunched up MAs, and we're still above them. I'm not seeing, this is not a distributive day. I've seen some folks post some bearish remarks, and this is not what I would consider a distributive day. I would consider this as consolidative day. Certainly it's not an accumulative day like, like we saw here with this big candle on Monday. Was that Monday? But it's a consolidative day, and I don't see it as a sell-off in any way at all. Okay, so let's see what you're talking about there, Gigi, with your chat. This is so weird. See, so I'm not seeing that. You're giving up watching the Masters for this? That's how much you appreciate me doing this on Thursdays. Well, thank you, Gigi. I'm very glad that you appreciate it, and I appreciate that you're here. I don't know why I'm not seeing this on the group chat. I would have thought that I would be seeing it here, but I'm not. And I know that I saw it here before, so I don't want to spend too much time playing with it. No, I see my post up there, but I don't see yours up there. But I see what you're saying. I do see it obviously on this screen share that you shared with me, but I don't want to spend too much time, working on the technical aspect of this when I should probably be working on that outside of when we're doing this. So let's go ahead and move it right along. Kisses right back at you, Gigi. Hold on. Here we go. Here, you're going to love this. Just for you, Gigi. All right, moving along. Back to the charts. Okay, so there's the SPY. SPY is now green. So that's, looking fine. It's kind of a doji, goes from green to red, but certainly continue to move in the right direction. The same thing with the diamond. You're just looking at a sideways consolidative action. You could say perhaps that, this is in an interim downtrend with this consolidating action. But as I go to build these lines, I don't know. It's not really, it's just triangle, right? You all see that? It's still an uptrend this way. I don't know if I can turn that into a descending wedge. Let's give that a shot. It doesn't look like it wants to be. Come on, let go. Thank you. Okay. Maybe I could say that's a descending wedge, sort of. Although I think the triangle is more logical here. This looks more to me like what it's doing. And when I pull out on this, what's the overall direction? Well, it's pretty sideways. And this is exactly what I've been talking about. The end of last year into the beginning of this year, it's been very hard to get ahead of this market because of all of this sort of sideways chop up and down action. And that's why we're going to start taking a look at longer term charts and shorter term charts. So let's go ahead and start that here. Looking at the weekly, well, this is definitely still bullish. I would say that's definitely an uptrend on the weekly chart. It's just going a little slower than we would like. And this just looks like consolidation when we look at this weekly chart. So if I zoom in on this weekly a little bit, that's a pretty nice looking chart, right? We still have this triangle in here. The weekly candles are currently a left-right combo through the 8-week EMA. Oops, I guess I forgot to turn my phone on. I'll have to shut that off. Sorry about that. And I would say that this is overall a generally nice looking chart. Maybe you could make an argument for this sort of rolling over action, but this high is higher than this high. So I don't really buy that. It's still an uptrend, but it looks like it's just consolidating as it gets ready to move higher. And I think, again, going back to the, we are going back to the daily chart, when we see how those moving averages are bunched up, that really says a lot. I think that really says that it's just building up steam and getting ready to take a move. I know folks were concerned that the IWM, it's a little redder, but it's not that bad. And it's actually been outperforming. So it's not surprising that small caps would have a little pullback here. It just doesn't look that bad. It's still an inside day. I know at one point it was outside of those of yesterday's candle. You can see that it, obviously dipped down further and then has been since bought back. The weekly chart looks fine. Get some of these lines out of here. The weekly chart just looks, again, like it's a little J-hook forming, right? Like it's consolidating what we had before. So not bad at all. And this actually looks a little bit like a little inverted head and shoulders pattern, right? With the head here and left shoulder here and a right shoulder here. So all of these charts to me look fairly bullish. When we look at them on the hourly chart, let's go ahead and do that since we've been talking about looking at the hourly charts. Well, that's not so bad either. Certainly it's had its dips, its zigs and zags, all stocks, all market, zig, zag, wax, wane, ebb, flow, however you want to talk about it. But it just looks like it's dipping a little and then, zigging and zagging. Let's take a look at some of the other, look at the diamond on the hourly chart. Actually, it's looking really nice. It's looking like a nice little J-hook in here. The SPY on the hourly also about the same, looking like it's getting ready to make a move. Everything's really tight, really consolidated, really coiling. So I have a feeling we're going to see some action here soon. Obviously, it's impossible to say which direction that's going to be when it's this tight. But the overall trajectory, the overall projection is definitely up. Looking at the XIV, I hit break even on this a couple days ago and took off half my position to reduce my risk here since it was such a large position. Now I'm in gains. So it's broken out here. No reason to think that this isn't going to keep going higher. It's finally gotten firmly through the 200-day moving average, and it's broken out of this top line here, which is on the weekly chart. Let me show you that. This was a definite descending wedge here on the weekly chart, and it's breaking out of that. And let's take a look at these candlesticks on this XIV. We have doji. It's a double doji sandwich in here, breaking out. On the weekly chart, that's the 50-week moving average. So that's significant as well. So breaking out of a lot of different levels of resistance here. And so that's really nice to see. Here's the hourly chart. I mean, come on, that's gorgeous, right? So I can't be bearish right now in this market. I just can't. That just looks too good to me. And I love seeing volatility pull in like this. That's really, volatility will always collapse. Okay, so I talk about this all the time. I've held on to this trade for, here, hi again. I've held on this trade for, about very long time. I dropped the F-bomb right here, but it's this is a family show, or at least it should be. I don't know. The point is a very long time, an F ton of time, as it were. And the reason that I've held on to it is because I knew 100% for certain that volatility would eventually collapse. I knew it could take a year or 6 months, as it has, but I did know that it would eventually collapse and that this would eventually go higher and that I would eventually be in profits again. I took off half at break even this time around because I've gotten to this point twice in this large position and ended up having to hold it on back down and back up again twice. So I wanted to make sure that I was out of half the risk because it was just too large of a position at that point. But I did manage to, by adding, as it went lower, I managed to lower my cost basis. Not something I generally recommend, not something I generally do in stocks, but I will do it in a short volatility trade. Now, if I had shorted VXX, instead of going long XIV. So I don't know, for those of you who've been following me a long time, you might remember that I used to only go short VXX. And that's because the idea of contango and decay being on my side. I'm not only selling the volatility, I'm also selling the volatility in the options. And I have that decay on my side because these products are all based on options that decay. So when you sell it and it goes to, it basically runs out of room, and expires. When these options expire, they expire worthless and you collect the premium. I've done that with actual options, but it's basically the same kind of idea when you're selling a bearish ETF, especially on volatility like VXX, because you're like selling double volatility. I had noticed last year, the year before, when volatility was very low, I guess it had to be the year before at this point, when volatility was very low, XIV paced to the upside what VXX was doing to the downside. And lots of folks I have in the room, several members of my service are trading retirement accounts and they can't go short. So I determined that it was really just as good. Oh, I lost my, I got the still thing in my ear. It was just as good to go long XIV as it was to go short VXX. But what happened was when that volatility came in the market, the short VXX trade started working better than the long XIV trade. And that's because it was working in opposite fashion. As volatility went up, the XIV was no longer able to pace the decay because it was all going the other direction. Now it's starting to go up higher, faster again. So I have some good confidence that it's going to continue this way and probably get to higher numbers quicker than we've been seeing in the past year. I know that Sylvan mentioned yesterday that he was concerned that it would take too long to get back up to higher numbers into the 40s, but I don't think that will be the case this time around, because now that the volatility is out of the market, XIV will start pacing VXX again to the upside and downside. But let's take a quick look. I just want to show you that VXX so you can see what I mean. If I had shorted this instead of going long the XIV all this time, I would have long been in profits. I never would have really lost if I'd shorted it back here, whenever it was that it was actually much longer ago. Whoa, 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 whoa. Oh, I don't want this on a 30-minute. Hello. Give me a longer term chart, please. Thank you. So if I had shorted this, back in here when I actually went long the XIV, I'd have been in profits almost the whole time. Versus the XIV, that was much more volatile, sort of followed the market more. This actually does look very much like the market. If you look at the market on this time frame, even the market's a little more bullish. I need to probably get some of these lines out of here so that it's not so confusing. These are just my levels. I'll just go back and find them again. Since we're not looking for those levels. I mean, clearly you can see where these levels come in, though. There's clear support in here, and then now there's clear support right here. So I think that it's still heading up. It's just doing a lot of sideways action in the market. So again, we just have to look at all the different time frames. All right, let's see what we got over here. This is the tight J-hook scan. Doesn't look like there's much on it right now. I've lowered my requirement for volume on the a scan because I was missing a lot of the early stocks on there because it only does daily volume, the volume for today, as opposed to average volume. And I trade off average volume, and I don't know how to put in a minimum of average volume. There's probably a way, and I just haven't figured it out. I'm being chastised for saying the letter F. I guess I'm not supposed to say the letter F. But here we have G Pro, for example, is on here, and you can see that's a nice little J hook forming, has tons of room to go higher. You got these volume at price bars, and you don't have a lot of volume until 65 and change. So it has a lot of room to go higher. XENTC, a lot of these may not have. See, that's not enough volume. So I just have to check the volume on all of them now. This one is okay. Look at that. Here is a new scan chart, guys. So we did not have this one earlier, this ACOO. Very, very nice looking. You can see that there's this J hook forming in here, and you've got all these rising MAs below. So very, very, very nice looking chart there. All right, let me go on back through and let's look at all the charts in my portfolio. Obviously, we already looked at XIV. One of the ones I had up here earlier was this SD. This is my oil chart that I didn't take when I had a good profit on it and should have. Look, it was such a small move though. And if you look at these volume at price bars, I mean, I guess that's exactly where it stopped, right at the top of the volume at price bar. So that's natural resistance. If it gets through there, it should whoosh to the 200-day based on this chart. But oil has just been difficult to trade because of all of the emotional stuff that's been going into it. When I look at this on an hourly chart, if I had been watching this hourly chart, I would have been out of it here, right? Or somewhere in here, certainly when it lost this 8-hour exponential moving average, if I was using this to trade off of, and I would have taken over 10% profits in that case. But I didn't. And so now I'm still watching it on all time frames because I still have it. I am in some profit, a little more than 1% profit. So it's not like I'm not losing money on it at this point. And it looks like it wants to go higher. It looks like it wants to go higher on this hourly chart, certainly. It looks like it wants to go higher to me on this daily chart, although it did lose this breakout level, and now it's got to get back through that. On the weekly chart, I had noticed this, and so I wanted to show you guys this. Look at this little W pattern in here. This looks pretty bullish, right? So I think it's going to be okay. Of course, again, it's oil, and oil is dependent on all this news that comes out of everywhere. As Russia gets better, I think oil, it'll be hard to say. So I'm not gonna make any projections on what oil is going to do. I know there's two camps going on right now, whether it's going to go higher or lower, and certainly it has the opportunity to do both. But right now, I'd say this stock is still looking fairly bullish on a chart, so we're going to stick with that. Apple, I don't know. I heard some folks were shorting this. I really don't get it. Looks like a good chart to me. Certainly is nice on the weekly chart, right? Just consolidating here, making this little triangle, making this little J hook pattern. Starting to turn the corner here off of the 8-week EMA. Taking a look at the daily chart. Okay, I still don't see that it's a short here, and it's Apple. So I'm pretty confident that it will go higher. This little triangle in here. It is getting towards the apex of that triangle, but it's, again, you have all of these bunched up moving averages. Look at these moving averages. And it's managing to kind of hold right on them or above them. It hasn't quite broken out of here yet, out of this range, but it's certainly not a bad looking chart. And it's Apple. I think that there are a lot of folks who are just, they're waiting for Apple to fail, right? They're waiting for, they're going to fail with the watch. Really? Apple has a habit of pulling very, very strong rabbits out of its hats. So I always think of Rocky and Bullwinkle. Oh, let me pull a rabbit out of my hat, and it roars, right? That's Apple. So I'm really not too concerned about Apple here, and I'm just going to keep riding it for now. Tile, again, a lot of sideways action, just consolidating. The interesting thing is on the daily chart, you think, oh, it's going sideways for so long, right? But this was a big move that it had made. And I'll show you guys this weekly chart here. And you can see, look at that. It hasn't even, the 8-week EMA hasn't even caught up yet. So this is just still consolidating this move before it goes higher. And, you know, maybe you could say it has some resistance up here. But I would say that it's still overall an okay looking chart, and I'm definitely going to give it more time. The hourly looks okay to me as well. It's just zigging and zagging. And let's take a look at AEO. Oh, AEO is about one of my favorites. So this is the hourly chart, which is, you know, you could just see how it just keeps coming up to that resistance point, right? Here we have it on the daily, and we have this belt hold candle here from last March 27th, and that gave this nice slow curve heading up, and it just keeps bumping up against that line. But what direction is that? That's a nice slow curve upwards, right? I love it when Mr. Bigelow says, observe the obvious. So to me, this is pretty obvious. When we look at this on the weekly chart, look at that. I mean, that's just a gorgeous chart, right? Even that belt hold candle, look at that belt hold candle. That belt hold candle on the weekly chart was a test of the 8-week EMA. And then it just has continued to flag out from there. So great looking chart on all time frames. And the very, very cool thing about this is this was my daughter's stock pick. So I'm all proud. I feel really proud of her because she's, I have an account for her, and she tells me what she wants to get into. She doesn't trade per se, she invests. And she likes to invest in companies that she thinks, you know, that she goes to, that she spends money at. So this is one of her favorite clothing stores, American Eagle Outfitters, and she wanted to own a piece of that. She also owns a piece of Disney and has for, oh gosh, several years now. And her Disney piece is up over 100%. So maybe I need to talk to her about perhaps getting into some Apple, since she's now an iPhone owner and user and fan. So maybe she would be interested in that as well. She does have some cash in her account that can get put to work. But this AEO, she actually bought it back in the 14s. She's up significantly on it. I'd have to look it up to see exactly how much. I'm not going to do the math in my head right now. But I feel really proud that it was her stock pick, and she nailed it. You know, she got in much earlier than I did, actually, and it's a beautiful looking chart. Okay, back to the charts. I haven't even gotten to your guys' requests yet. I'm sorry, I'm taking so long this morning. What is up with that? I'm dying to see how much she's up on this. I'm actually going to go take a quick look to see how much she's up on her AEO. I know she's doubled her portfolio since she got it just a few years ago, but it's really nice to see that. Her AEO is up 21%, and her Disney's up almost 200%. So that's pretty cool. All right, moving down my list of holdings, we have NDRM. This was a tough one, boy. It lost a lot of ground, and it's been hard to be patient. But look at that weekly chart. Weekly chart's gorgeous. Left-right combo, multiple dojis in here, clearly taking off from that. Just didn't get a really good entry, I think, on this, because I bought it this day when I thought it was breaking out of this, and it wasn't. But I wanted to give one of these great drug stocks a shot, because I've been watching GG just kill it on these, and I tend to avoid the drug stock. So when he pointed this one out and got into it, I decided to join him, and I'm glad I did. You know, at this point, you know, it's down a little bit, 4%, but I like the potential here. I like the look of the chart. The charts are really nice. So I'm just going to go ahead and stick with that. Let's take a look at the hourly since we looked at the weekly. You know, it's pulling back a little bit here, but that's a nice, pretty decent looking hourly chart, right? Got a lot of dojis in here, broke out from there. So I think that that this will do well in the long run. The SD we already talked about. Look at that. It's coming back just fine. Celgene. This is another drug stock, but this is one that I've traded before. I don't feel as it's a larger cap company. It's a larger company. It doesn't tend to make the big volatile moves that some of these other ones do, although it certainly has. I really liked the way it looked on this daily chart when Lance pointed it out yesterday. It had gotten through this ADMA after this doji the day before, creating a trader's best friend, which is a term coined by Stephen Bigelow, which is a doji followed by a gap up. And they tend to work really well. It was through the ADMA. It's lost it again today. I will likely give it time as long as it holds up in this area right by this ADMA. If it loses that with any significance, then I'll drop it. But right now we're talking about 0.7% that my position's off, so not a big deal. I grabbed the Yahoo this morning on this island bottom. And I probably need to have a discussion with Gigi about whether we think this island bottom held. I don't think it did. I don't think it's an island bottom anymore. But it's still a breakout, certainly. So I will definitely give it some more time as well. It's has this room here in this. Let me pull it out. There's definitely some volume at price space here. I'm not sure how I have this set up on this computer. I may not have it set up quite right. But some volume at price stuff that should take it up, at the very least, $48, $49. So let's see if we can pull this in a bit. Yeah, that's where I had it. That's why. There we go. That makes more sense. So you can see, right, the volume at price. There's not a lot of volume at price in here. Well, it does have this, Raj pointed out that it had this gap resistance because that's exactly where it stopped, was the bottom of the gap. But it has not a lot of volume in here, so it's likely just digesting the move, and no reason why I can't give that a little bit more time. Okay, let's come back and look at the requests in the room. So we have C from Raj. So let's take a look at C. This is the daily chart. Not bad here. Again, we have all of these bunched up moving averages, including the 200, which is interesting. And you have the 50 that just crossed up over the 200. So that's a bullish signal. Certainly looks like it's in an upward trajectory here after hitting a bottom right around that 50-day moving average, after dipping below the 50 and the 200 and started moving back up. I don't know that I would buy it here yet. I think that I would want to see a bit more positive action there. Certainly, we had this W pattern that worked really well. If you got into it here when it got through that W and took out the ADMA, or even when it took out this high here and broke out, you would have had a nice move higher, dip, and then up, and then this, created this sort of rolling over M top here, and it's coming up from there. So it's not bad looking. Certainly not my favorite chart that I think I would get into at this point. The weekly is not bad, kind of a scoop pattern, kind of straight and then scoop. And maybe even be putting in an inverse head and shoulders here, with this being the head on this weekly chart. And then you have a shoulder and another shoulder here. So that could definitely make a move from there. Looking at that on the hourly chart, because we're talking about looking at that, I promised that I would spend time with these hourly charts. Again, I think it just looks like it's definitely coming up from the bottom, but on this chart, it could be a bear flag. It could end up becoming a big, dreaded H pattern. So just need to watch this for a while. It's really in a sideways action, consolidating. A lot of bunched MAs on multiple time frames, which I find really interesting. So keep an eye on that. Definitely worth watching. Glue, Raj, I know you mentioned that yesterday. That's a great looking chart. I know it's pulled back a little bit back to the T-line again today, but this is a really nice looking chart. This is the daily, and certainly it's a J hook. Certainly it's also a flag, but it's also got this little W in here, which is kind of cool. I think if you wanted to put a resistance line up here, you would definitely see that in there. It actually started to break out, I think, yesterday of that resistance line, if you can see that in there. And then it pulled back into it to come back to the ADMA. but it's currently back above that level. So this is a nice looking chart. You can see that, I'm sure this hourly is going to look like a W pattern, right? Let's pull this out of it. Oh, stop that. I hate it when it does that. Let me close that. All right. It's kind of a W pattern on this hourly chart here. Again, that's that resistance level. Not really learning anything new here from this hourly chart. If you wanted to trade it based on this chart, then you've got your ADMA here on the hourly, the 8 hour, the 8 hour. The 8 hour moving exponential moving average is right there with that resistance line. So that I think that if you get through there, that could definitely be an entry on this. Overall, the chart looks great. Taking a look at the weekly, just gorgeous. That's a beautiful J hook on the weekly. So putting in a doji this week, perhaps. There's certainly a doji sandwich from last week. You have this after this dip to the 8-week moving average, exponential moving average. You have this bounce from there, starting the J hook. Then you have a doji, and then you have another bullish candle the following week. So you already have a doji sandwich in there off of the 8-week EMA, and you have another doji currently forming. We won't know what that's going to look like for sure until tomorrow, because tomorrow's the end of the week. But definitely a really, really nice looking chart on all time frames. Adobe, also nice on the weekly. This is a weekly chart. Definitely took a dip in here and is coming back up through that 8-week EMA. Let's take a look at that daily. Daily's just gorgeous. I really, really like this daily chart. I like the way this dipped, found support just above the 200, where it's found support before, you can see, and then started consolidating all these moving averages, the 8, the 50, the 21, and the 34E, and is now putting in a trader's best friend today with yesterday's doji and today's gap up. I'm pretty sure that's a gap up by looking at it, but sometimes I find I'm wrong and I have to look it up. 75.44 closed. 75.62 it opened. So definitely a gap up, definitely a trader's best friend in there. Very nice looking chart, Raj. You are getting such a good eye. Very, very impressed with how good your eye is. Wow, beautiful hourly chart too. Look at that. Nice curve in there, nice slow curve in there. Observe the obvious. Yeah, you could buy that for sure. That's a nice looking chart. Adobe. These are the guys that make all our flash stuff, right? Okay, let's see. SYRG for coach. Certainly it's above the ADMA. Certainly it rides the ADMA. Certainly you have some very tight moving averages in there. It's oil, right? So that whole space has been volatile, iffy. You can see all these wicks in here too. That kind of gives you that hint as well. Not a horrible looking chart. I think I would say you don't want to enter this here. Oops. Weekly's not bad looking, actually. Check out that weekly's really not bad looking. It has done nothing but come up since 2012. It did not take as big of a dips as with oil when oil came down. I'm not sure what portion of the industry this company represents. I would have to look that up. But certainly the weekly chart has a bullish look. You have this double bottom here. And then you have this really nice tight coiled move through with these moving averages, and it's managing to stay above that for now. You also just got a cross of the ADM of the 3 EMA over the ADMA, although you could see a lot of that's pretty volatile in here, so you can't really use that as a great indicator because of the way that the energy space has been, I think. On the hourly chart, this looks bearish. So if you're in this, I would say watch it carefully. But I wouldn't buy it here. It's certainly worth watching, but I wouldn't buy it here. GMCR, this was one that was looking so good. And I really meant to buy it as soon as it came through this ADMA. And I didn't yesterday. I think it was Gigi who actually posted some good fundamental stuff on this that was really interesting. this probably has a lot of opportunity to go higher. It does have a lot of moving averages in here, though, that it needs to get through. So those could present some definite resistance in the same area. Let's go back to this chart. In the same area, it has strong volume at price. I mean, you can see that, right? There's a lot of candles right in this price range. So that causes resistance. So I'm not sure. I think that the opportunity to get in was if it had come right through this ADMA. At this point, I think we just need to watch it. Let's take a look at the hourly chart. Hourly's nice on this one. There's that breakout level, and then it held it. So that's really interesting, and it's holding this ADMA on the hourly chart, and it's just putting in a left-right combo with the doji from the last hour and a more bullish candle here. It's not a very big move to the 200-day, but it is a nice curved fry pan type bottom. Definitely has potential still here, but it also has a lot of time. I think when we look at it on the weekly chart, I'm sure we'll see that. In fact, on the weekly chart, it's still kind of rolling over. So I would want to see a bit more. See it. It's not getting through this 8-week EMA. It is a left-right combo on the weekly. It has all of these moving averages up top. That look like they're around the same area as they are on the daily chart. So at this point, I would say we just want to watch GMCR. This isn't really an entry here, but I think that this could be a really good trade for us going forward. GPro is looking quite decent today. I think that I mentioned it earlier, it came up on the scan. So it's putting in a J-hook pattern here on the daily. After coming out of this, hold on, let's take a look at this descending pattern. Come on out here. Come on. There we go. Good dog. I have too many moving averages on here, but I'll leave that. Whether you look at that line or that line is probably irrelevant, but clearly it had this channel that was in a downtrend, and it broke out of that. And we're not really crazy about V shapes getting in on a V because V shape recoveries are pretty rare. So this has done exactly what it should do. It's sort of bounced up, came up through the trend, the downtrend, broke the downtrend, and then pulled back a little bit through the ADMA and came back up through it. So that's a nice bullish chart. And again, you've got that double doji sandwich in there. Going to the weekly, even the weekly is looking nice because you can really see that definite break. And you had these dojis right at the bottom. In fact, that's morning star-ish. Not sure if that's a gap up and gap down from the previous candles. It looks like it is. But I would say that's definitely a morning star type bottom on that weekly chart for GoPro. And even the hourly looks nice. Look, you've got a TBF right now on the hourly. So I think that this is definitely one you could get into here. Really looks nice here, even through that 50-day moving average. Definitely a buy here. Baba. Wow, this looks like GoPro. Ooh, is this? This is nice because you have this definite bottom. It's not an island bottom because it didn't gap up into the gap, but it is moving up through this downtrend. It's moved up through this 50-day moving average on the daily chart. This is a nice looking chart. Previous day's candle, yesterday's candle was a TBF after multiple dojis. Almost could call it a cradle because you have this flush down, a couple of dojis, and then this move up. But definitely a bullish pattern here on the daily chart. I want to make sure I look at the hourly on every chart because this is what some of the things you're talking about. This looks like a good entry here on this hourly chart because you have that doji that came back and dipped through the gravestone doji that dipped through the 8 EMA on the hourly, the 8-hour EMA, and is now moving higher. That looks like a bullish engulfing candle, so I'm going to say it's a left-right combo on the hourly chart. Oops, I didn't mean to do that. Actually, though, it's fun that I did that because it kind of looks like a J-hook in here, right? Multiple J-hooks. Let's just go ahead and come back to the hourly, though. Let's see here. And then it's interesting, right? This almost looks better on the 30-minute. You really get an idea for that, the movement in here on this 30-minute chart, I think. you know, I'm doing the charts on my Asus laptop, and I have problems with it sometimes. It doesn't work as well as I'd like to. You can really see that. Let's see if we move this to the hourly. Back to the hourly, yeah. So you can see it's kind of J-hooking in here after it came up from here. Is that today's move? Yeah. So looking at this, did we look at the weekly chart yet? Yeah, you know, weekly chart just coming through that 8-week EMA and obviously broke that downtrend. So I think BABA can be bought for easy risk reward. You can easily put a stop below the low of the day or the 50-day moving average or this trend line. And I think that that's pretty easy risk reward. Triple D, this has been looking good, right, for a few days, but it does have this very obvious line of resistance, and it hit that 2 days ago and then pulled back from there. And that's also, you also have the 50-day moving average in there, which it's having trouble getting through. For now, this could just mean, so when I see a chart like this is an overall bullish looking chart, but it has resistance, and the resistance is clear. And so do I think that that means it's not going to get through that resistance? Not at all. I think it has a very good potential of getting through this resistance based on the candlesticks and the pattern. But it will take its time to get through it. It has to sort of work through it, churn through it, because it's resistance. Sometimes resistance means it's going to get rejected. You know, that's where it gets rejected, and then you know that it's not going higher. Hourly chart looks really nice. It's going to go back at that resistance and work at it again. You can see the sort of double bottom in here, a sort of double wave pattern in here, kind of a J-hook really off of this move. And the weekly chart, weekly chart's a cradle. I think I mentioned this before, that this was putting in a cradle. We didn't quite know yet because this week's candle wasn't done. Unless this really loses ground tomorrow, this will be a cradle on the weekly chart. And I'd like to see it close above that 8-week EMA. It's right there, 28.54, currently at 28.64. So it's above it by 10 cents. If this closed like this tomorrow, this would be a really nice chart to get into, maybe even at the end of tomorrow or Monday morning. SCTY. So this is one of those companies, you know, that can never make money. I've talked about this before. Their business plan, the way their business plan is set up, because they're a leasing company, they can basically never make money. The only time they start making money is when they stop leasing solar equipment. And when they stop leasing solar equipment, the stock will go down, because people don't really understand that more business doesn't always mean more money. But when they have to pay more for their salesmen and their installers and their equipment, then they actually make back, because they're leasing it. They make money over time, and they don't actually make their money back for a very long time. I have all the statistics written down somewhere, but the gist is that these guys don't make money. So you never want to own this, but you can certainly trade it. Weekly chart's okay. I see a double bottom in here, but some resistance up here. It's a company I tend to stay away from because I know too much. Kind of an issue with having a, you know, alternative energy and semiconductor fundamental analyst in my home. The daily chart, you know, I mean, you could have gotten this. Not now. It's, you know, it's just too late. It might tag that 200. That's clear resistance there, right? I mean, this is a little extended at this point. It had put in a doji sandwich yesterday. If you'd gotten that right away yesterday, then maybe you could say you could take a ride to the 200, which is 10%. So that would have been an okay entry yesterday. At this point, I would say you're only about 5% to that 200. And I really just wouldn't even bother. You know, I'm looking at the hourly chart because I said I would look at all the hourly charts. But the truth is, if it doesn't look good if I'm not happy with it on the daily chart, I'm not going to bother looking at it on other time frames. There's just no point. So let's go back to the daily, because this is my first and foremost. Going down your list there, Lance, we've got fold. Ooh, that's pretty. Volume is good. Nice J-hook pattern. You're looking at first target of this swing high of 1320, which from 1156 is still a decent move, more than 10%. You could trade this, easy risk reward here. You could easily buy this. Going to the hourly chart, yeah, you know, even on the hourly chart, you got this really bunched up moving averages, definitely consolidating in here. No reason why you couldn't buy this right here. Weekly chart. Wow, also a great looker. Really great look on this weekly chart. My poor dog, I put him outside and now he's barking at the back door. I don't know if you can hear him or not. Very high pitched. Yay! I want in. Really nice looking chart there, Lance. I like the fold. Fold is nice. Now, not later, but now. Ooh, look at that little W pattern in there. Breaking out of this. Just breaking out of that. Risk reward is fairly easy. 79 from 81, $2 on an $80 chart. I mean, that's only, that's less than 3%. Where is it? Let's see. Let's take a look at this hourly. I mean, when you look at these other time frames, it's the same. You do the same thing, and you just decide, based on how long you want to stay into something, whether you're going to trade it on the daily chart or the weekly chart or the hourly chart. On the oil stocks, it just makes sense to start looking at those hourly charts so that you can get out before they lose ground too far because they're so volatile. But for the most part, I prefer looking at the longer term charts. I'd rather go longer than shorter. Hourly is a great way to look at, for entries or to find out if you've got something that's going to really roll over. On the weekly chart, this looks pretty decent. Been riding the hugging, the ADMA. That ADMA is getting further away from these other moving averages. And you have some consolidation up here with this top line that it needs to get through, but still a nice looking chart on the weekly as well as the daily. Next one is LOCK. So this one has a nice pattern. Inverted head and shoulders here, head, left shoulder, right shoulder. Looks like it wants to go higher. Currently a doji right off the T-line. T-line is the ADMA for those of you who don't know. 200-day doesn't look like it tends to provide much resistance or support. It just sort of falls right through and then pops right back up. So I wouldn't be too concerned about that. If you really liked this, I would say that you could certainly buy it. Risk reward is very easy with the T-line being, only 11 cents below where it is now. Tons of other support below. You can see that there's definitely a curve here. You might even want to call this a cup and handle. Looking at the hourly chart, because it's that red doji, see, it's just not going anywhere. It's just going sideways. And you can tell by looking at one chart what the other ones are going to look like once you get the hang of this more. It's really pretty obvious. Weekly chart's quite decent as well. I have all these old things in here. Just get rid of them. Looks like it's coming back up, kind of trying to make a J-hook pattern on this weekly chart. Looks like it's a trader's best friend on the weekly chart to me. Yes, you have, actually it's like a double doji sandwich or a double doji trader's best friend. Definitely gap up this week from last week's doji, but last week's doji was also a gap up from the previous week's doji. So it looks like there's maybe a lot of indecision in here as it tries to get through that 50-week moving average, the blue line there. But definite potential here. I would keep this on watch. I'd like to see it get out of this. Looks a little stuck in a range right now for me. So I'd like to see it get out of there, but definitely worth looking at. Har. That's a gorgeous chart. Gorgeous. Beautiful bunched up MAs. ADMA is popped up through everything in here. See, the red is the T-line, the ADMA. And the trajectory is definitely nice. And I hate that it does that. I don't know how to keep it from doing that. I gotta figure that out. Maybe I gotta go read my messages. Looking like a J-hook pattern in here on the daily chart. And on the hourly, I'm pretty sure it's going to look pretty bullish because it had that nice big green candle, see? So I knew it was going to look like it was definitely moving higher. Obviously, it has this resistance in here that it needs to get through. That's the top of that J-hook. Weekly chart, yeah, nice. I mean, that looks nice, right? You can see that it's even got this little W sort of in here and then this nice J-hook forming right off the 8-week exponential moving average. and you also have a left-right combo. All right, Ollie is barking his little head off. Poor little guy. So I'm just going to run quickly and let him in and just take a look at that har chart, and I'll be right back. 2 seconds. Okay, I'm back. running. All right. Yeah, I really like this har chart. Har. Especially on this weekly. Beauty. Okay, going back to the daily to look at the loco. Loco. Loco has potential. This is El Pollo Loco, which IPO'd just towards the end of last year, I believe. Wow, it really took a dump in December, didn't it? So it has very little volume at price up in here because of this move that it took lower. So if you're looking at it for target, around 33, a little bit higher than 33. Certainly these candles look bullish in here. Looks like it is taking another move higher. Made these waves here and is on wave 3 here. Needs to get through this top line, clear resistance there at that top line, right? But it looks good. Would I buy it here? Probably not. I think I would want to wait until, I don't know. It's not my favorite for some reason. Let's take a look at the hourly chart. It feels a little extended, and yet at the same time, it doesn't feel like it's there yet. Well, weekly's nice. Weekly says a lot, though. Based on this weekly chart, it's a buy. Because that's a spinning top doji type candle. You have the left-right combo right through that 8-week EMA. And you also have the 2 EMA up through that 8 EMA. You could buy this. It's not my favorite. I've always liked them. I haven't eaten at El Pollo Loco in so long, but of course I don't like to eat chicken that's not. I don't know where it comes from anymore, but it used to be great back in the day. Yeah, all right. I'm going to move right along from here. Let's see. SanDisk for Raj. Yeah, you know, this, you can't deny that that looks good. It's probably going to the, you have that doji sandwich in there, pushed through that ADMA after it took that big drop on, was that bad earnings or it was a pre-announcement? I think it was a pre-announcement. Keep in mind, though, that pre-announcement, while it was very overdone and while it certainly is priced in at this point, once they do announce, it could be even worse. So this is actually, that's an island top in there. I'm sure you all see that that's an island and it gapped down from there. I don't know if there's, oh wait, that's not an island top because there's another island up here. There'd have to be another island at the bottom. And there's not. So it's not really an island top. But, you know, will it fill this gap? Maybe. Certainly probably will tag the 50. 50 tends to act as support. You can see an end resistance in here. So I'm guessing that could happen again. Probably will tag the 50, which is $8. You know, it's a little more than 10%. So would not be a bad trade. Risk reward 69. I mean, it's an easy stock to try. And as you know, as some of you may know, let's go ahead and talk about that for a second. As some of you may know, I'm sorry about the glasses. This is an odds game, and I play it like it's odds, and I just try to keep the odds in my favor at all time. And so that part of that means, you know, you're not going to pick a stock and be right every time. It's just not how it works. The best traders on Wall Street are still only right about half the time. You use all of these tools with the charting and with the different time frames and with the patterns and the candlesticks to help keep the odds in your favor. So maybe you're going to be right a little more than half of the time, but you still just need to like try different ones. If you have a chart that you like and it has, bullish pattern or different bullish indicators on it that you like, try it. Don't feel like, oh, but it might not work. Yeah, you're right. It might not work. Half the time it's going to not work. So you just have to try it, and you have to try it multiple times and look at your risk reward. Make sure your risk is low. Your reward is at least double what your risk is. Make sure that your risk works well for your own personal trading profile. You should have your own set of rules and your own profile that works for you, that's going to not trigger your emotions. Because what we definitely don't want to see is emotional trading. It has to be just based on mechanics. Okay, this is my risk, this is my reward. I know I'm going to go into this knowing that what I'm risking, and that I'm okay with that ahead of time. And I know that my potential reward is much higher than my risk. So I'm going to do that in 10 stocks. I'm going to lose on half of them. Let's say if I do 10 stocks and I lose my risk of 5% on 5 of them, but I make at least 10% on the other 5 of them, I'm going to be in profits. So you have to try them. If you see a stock that you like, that you're interested in, you can only buy so many, you can only manage so many, but you do have to do it small and often in order to keep those odds in your favor. So if you like this SanDisk, it has a lot going for it, I say try it. Just don't make it your only stock. Going back to it. Yeah, and again, this is one, buy it, don't own it, because it has some stuff in its coffers that's not so pretty. All right, coming down the list here, textbook candle formation. This is GG. DSKY. And what did you say here? Cradle pattern. Yes, indeed. That's quite the cradle, actually. And becomes a cradle and a cradle. TBF, double doji TBF. Oh, yes, I see that. 2 dojis and the gap up. And it becomes a full box breakout over round number $9. So that makes sense. That's probably the top of this, right? Yeah, that makes sense. Nice little chart here. What does this look like on the weekly? I'm sure it looks like more of a cradle on the weekly. Yes, yeah, I knew, because there's dojis in there. It was kind of a sloppy cradle on the daily, right? It was definitely a cradle on the daily, but it was sloppier. These are definitely dojis in here, and you definitely have that cradle pattern on the weekly chart. And again, after you, nice hourly. After you look at these charts a while, you'll know you'll pretty much be able to kind of tell what they're going to look like on the various time frames. This is really nice. Crunching the 34 EMA with the 200 EMA, that's acting as clear resistance with the 200 SMA, I should say. Sorry about that. Clear resistance on this hourly chart. If it gets through that above 884, or you could set your limit buy for just above $9. I think that's a really great chart, of course, because Gigi knows his charts, and that's a very cool looking chart. And volume is okay. What else? Nice bounce off the 200 for XIV. Let's take a look. Indeed. Look at that. Just going higher. Oops. Didn't mean to go to a 1-minute chart there. Sorry about that. Clearly it's going higher though, right? Let's look at the weekly. Weekly's nice because it's breaking out of that wedge. We did this earlier, of course, as well, but since I saw it again in the chat room there. Would XIV become a big cup or too zigzaggy? Would it become, and then GG says DSKY is a cradle on the weekly too. So obviously Gigi figured that out before I even saw it. Yeah, you could say that's a cup, I guess. Is this the daily chart that you're talking about, JJ Sullivan? It looks more like a W than a cup, right? Because you got this sort of double bottom in here. Let's take that out at this point. I'd say this would be more of a W than a cup. I'm not sure where you would see the cup. Maybe on the weekly. Yeah, maybe. On the weekly, to me, this looks like a J hook forming, a descending wedge, but it's turning into a J hook here. Looking at the hourly, it's doing fine. So XIV is doing just exactly what we want it to do, and that is a good thing. SMH hammer. Let's take a look at that. Long show today, huh? Sorry about that, guys. Lots to talk about. Hammer? SMH hammer. I'm sorry, I don't see. Maybe there's a hammer from a few days ago. I'm not sure. That's not even a hammer. That's an inverted hammer. Hammer back here in February, for sure. Maybe it was a hammer earlier and it's no longer a hammer, although normally you don't really point out a hammer unless it's at the bottom or top of a range. Like that's a hammer right there from February 2nd. Maybe you're looking at a different time frame. I don't know. Hourly looks okay on this. The weekly looks pretty good. Trying to get through the 8-week EMA. Let's go back to that daily. Let me take a better look at that. Come on. Yeah, I don't know. This isn't my favorite chart. It keeps hitting this bottom here. Looks like it wants to try and get through it. You knock so many times and you have this double sort of M top. So who knows what this is going to do here. Certainly it's through that ADMA and it has all these other moving averages that it's bunching there. If it gets through that, then it might be okay. But I would say this is definitely not my favorite chart at the moment. OAS. Oh, yeah. That's nice. What is SD looking like? Not as good. So definitely certain oil stocks are doing better than others. This one looks good. Looks really good here. Certainly could buy that. Oh, there's Ollie making his noise again. We have on Thursdays, we have the trash and pickup, and they also have recycling and the compost pickup. So there's 3 different trucks that come by all day long, and that causes some commotion for him, and he wants to bark at them. Very, very nice looking daily chart. Huge pocket of volume here to the 200-day moving average. I think if you're looking to get into an oil stock, this is definitely one that looks great, even on the weekly chart. Oops. What? Grr. Come here. Okay, that's better. There we go. Oh, that was not what I wanted to do. Okay. Have this sort of, right, waving up, more of a wave up action here on this weekly chart through the ADMA. We'll go back to that weekly chart actually in a second. Hourly chart looks nice here as well. Definitely trying to putting on all these dojis right along the ADMA. Let's go back to that weekly chart, because one thing I wanted to point out here is all these, you know what? This is a cradle. It's not a pretty cradle because it's got a lot of movement in it, but these are all dojis. And there's your flush down, these are your dojis, and here's your flush up. So this is also a cradle on this OAS on the weekly. So I would definitely consider this something that you could definitely trade here if you were looking to get into one of the oil stocks. Looks really, really nice. Okay, OIS with all of the oil stocks. Yahoo's setting up a doji sandwich. Take a quick look at that. Yahoo! Well, what you're saying is that Yahoo is putting in a doji at this point, which we knew. It was earlier as well. And the hourly chart looks good too. See, that's the thing is I would say is that if you're concerned about a stock going the wrong way on you, watch the hourly chart. If you have a candle that closes below the ADMA on the hourly chart, you're justified in closing it. And if I had done that with SD, look up here when it closed, maybe I would have said, okay, it's going to give it a little more room here, a little more room here. Certainly I would have closed it by here. And that would have still kept me in 10% profits instead of writing it back down and then now waiting to see what it's going to do. So definitely looking at this hourly chart when you think something is reversing on you and you want to lock in profits, that's definitely a way to do this. Had this bounced up and then continued going higher, there would have been no reason to sell it on the hourly chart and would be looking fine on the daily as well. But it did not do that. We can clearly see that on that hourly chart, and that's a great opportunity to take profits when you have something that's volatile like that, that's going the wrong way. Okay, that pretty much, I think, that pretty much covers it for today. I don't see any more requests in the room. FCC, where's FCC? Is that something you wanted to, is that a chart that you wanted to see there, Lance? FCC? Let me see. No, I don't think so. I think you were saying something else. So I won't worry about that. Again, I am Danielle, and I am the Trading Wife. And you can check out my website at thetradingwife.net. That's www.thetradingwife.net. And I have lots of posts on there. I have my performance on there. Let's talk about performance for a second. My performance this year has not been great. I'm actually, I think, still down for the year. Not by much, because I'm really careful when things go the wrong way for me. But this sideways choppy action has not been good for me as a swing trader. And I have not done a good job of taking profits earlier by looking at those hourly charts. That's the reason that I brought that up. And that's the reason that I wanted to talk about that some more. And also because Lance had requested it. He requested it, of course, because I mentioned it in the room. And I think I mentioned it elsewhere as well. But go ahead on my website, and there's a lot of posts on there and videos on there. There's a good one I did last weekend over the Easter weekend about Apple. I think that it's a really good learning chart or video, rather, on how to think about entering stocks or not entering stocks when you have fundamental versus technical analysis, as well as thinking about earnings, etc. So I think that's a really good learning video. Stocks are looking good right now. I think everything's looking pretty decent. SPY is going back to the SPY is, wow. Wow, look what happened to the SPY, guys. All right, in the time that we've been doing this, all right, let's take a quick look. Because some of you guys were feeling bearish on this, and that's clearly, you know, that was a doji earlier, and I mentioned it's still holding those moving averages. There's no reason to think that this is anything other than a little wax and wane, and I think that you can definitely see that now, like, right, it's a nice looking candle today. So definitely moving higher at this point. And no FCC. I'm Danielle and you're not. Okay, I don't know what he's saying. I'm Danielle and you're not. I think that's what he means. And I'm also the Trading Wife. And again, if you want to send me an email, please do so at thetradingwife@gmail.com. The Trading Wife's all one word, @gmail.com. Check me out on Twitter. I don't post a whole lot, but I do try and get out there at least a few times a week and post a couple charts, and my posts that go onto all my blog posts that go onto my site also automatically go onto Twitter. So that's at the Trading Wife. Again, all one word. I hope you all have a great day, and I won't be here next week. I'm actually going away with my family for a little bit of vacation and a little bit of consoling a sick friend as well. So I'll be gone next week, but I will be back the following week feeling chipper. And of course, I will check in with all my guys in the chat room and my members online. I have a lot of members who don't come into the chat room, like a ton. I think some of them do come into the chat room, but then they just observe. They don't really participate much. The majority of my members actually don't participate in the chat room. The majority of my members just follow me on email, and maybe they come in and they read the chat room at night when they're finished with work. So again, thanks for watching. Hope you all have a great day, and I'll see you in 2 weeks. Take care. Bye-bye. And good trading.